In the previous lecture, we saw the journal general and the general ledger, and also looked at how the transaction entries are made in both the book of accounts. Please note here that nowadays many companies record their transactions electronically using a computer and some software. But remember that the basics remain same, they don't change. In this lecture, we will continue to look at some more transactions and also see how the accounting equation maintains its balance. By now you must have memorized the accounting equation: assets equals liabilities plus equity. Now here we are going to look at some of the transactions and see how they impact the accounting equation. As you can see, we have assets on the left side, then we have liabilities and the equity on the right side, and then we have also divided the assets into the different types of assets. These are just some examples. You know that there are many different types of assets, tangible and intangible assets, but here we are just looking at cash, supplies and equipment under the assets. Then under liabilities, we have two different types of liabilities mentioned here: accounts payable and notes payable. You can have more liabilities. And under equity, we have owner's capital, owner's withdrawals, revenues and expenses.